That's what we were waiting for, the train wreck of the week.
It's about that time for the IRS train wreck of the week. This is the segment of the show where I talk about somebody who came into the office as something of a train wreck. They had a disastrous situation, and there's always a happy ending. So in this show, this particular show, it's going to be a little bit different. I don't think I've ever really talked about this situation. You know, there's a statute of limitations for the collection of tax, and it runs 10 years from the assessment of the tax. And you can think of the assessment of the tax either when you file a tax return with a balance due or when the IRS just files a tax return for you, and that's called a substitute for return. In this particular case, this individual was a real estate investor and had sold 3 houses, as I recall, and never filed tax returns. And so the IRS eventually filed what are known as substitute for returns for her, and they came up with a tax bill over 2 tax years of $116,955.91. Now, keep in mind, these substitute for returns were fiction, okay? Because what they did when they prepared the return is they just added up the sale price of the house as if she got the houses for free, which she didn't happen, obviously. And they just multiplied by the tax rate, and it came out with this giant bill. And so when she came into the office and kind of told me about the scenario and told me about what tax years they were, I said, well, why don't we go ahead and just get a power of attorney for you and take a nice, discreet, electronic look at your transcripts so we can see, well, maybe the statute of limitations is coming close.
Can the IRS see that, or does that kind of fall off the radar?
I think they can see it. I mean, there's a record that I made that inquiry, but there's probably millions of those inquiries a day. So it doesn't trigger anything in particular. It's not going to trigger collection action, for example. I've been doing this for many years, and I've never seen it trigger collection action. So when we went ahead and got those transcripts, I was able to identify that the statute of limitations on at least these 2 years was going to expire in a few months. So the worst thing you could do, circling back to the first and second segment of the show, the worst thing you could do is call them at that point. What do you think is going to happen if you call them? Hey, I owe you like over $100,000, and
like you said, the fire will start.
The statute of limitations is about to blow. What do you say? That would be a really bad idea. And so what we did is we just kind of laid low. We just took no action. And then eventually, at least on those 2 years, the statute of limitations expired. Now, there's sort of an interesting angle on this case. So that was over almost $117,000 that she just doesn't have to pay.
And it was how old? 7 years old?
It was over 10 years old.
Okay, 10 years old.
And it was actually for tax year 2001 and 2002. But remember, when they prepare a substitute for return, it usually takes them a while to get there. And so that's why in 2016 we're still here dealing with this. But there's about another $300,000 on a little bit later tax year, and it's just got a few more months to go. So it looks like she's going to get out of that as well.